Alright, everyone, welcome back to week 35, a week where in the markets that I was watching at least, there wasn't much definitively new, but not to say it wasn't an interesting week, and I have a few thoughts which I'm going to share here today. So, what's going on in general? Well, there's been plenty of talk about trade talks, and talk about trade talks is the most ironic and redundant thing I could think of, but it seems to be what everyone's talking about still. Okay, we'll see how that goes eventually. Meantime, not much in terms of either way big economic news, but I think looks like we're trending on the same direction as we were before. Now, the one thing I want to say a little bit about is it does look like July is on the path to be a 25 basis point rate cut as opposed to 50. In the past, many cuts have been 50 basis points. Now, that in isolation isn't what I wanted to make a point on. The point is, I remember last year, there was all talk about which stocks were moving and what was changing based on us heading into a rising interest rate environment. I'll bet a bunch of you probably remember that, like what it means for dividend stocks, what it means for this, that, the other thing. The thing I want to say is now, I don't know if one cut would make it a trend, and historically, aside from in the 90s, it has generally preceded further cuts. But again, no guarantees, and we'll see. But what does that mean for different things, for different types of trades? For example, in the uranium sector, the rising rates was something that helped the carry trade kind of fade a bit. Will stuff like that I know, don't worry, I know that uranium can't be just created by traders. I'm just saying, will things like that reemerge? Will different types of trade, different types of investments outperform based on if we're heading into a declining rate environment? And the other thing was this lower rates will help funding for everything from cheap oil to governments. And I think we all know that governments like spending and companies like showing that they're doing something. I mean, everyone likes showing that they're doing something, I'm talking companies now, whether it's useful or not. The big example of this is oil. So we'll have to see first of all, if it's a declining rate environment continuously, and if so, we have to think about what that means. Okay, so on to a look of two of our favorite subjects who just happen to be different yellow metals. Now, some of you probably had a pleasant day in Uranium Friday if you're in uranium. Some equities, albeit didn't move that much, but and some moved a lot, and I don't know what caused it. I'm always looking for a catalyst. I'm always looking for, well, what is the market within the uranium stock saying? And I have to say, it didn't make sense in terms of a 232 versus not 232 message. Cameco was up big, Kazatomprom was up big, and some US players were up big. The market wasn't really saying anything specific, really. It just moved, and we'll have to see if that's not just a one-day thing and it moves back. The price wasn't up that day. There is a lot of secondary prices that are showing signs of things breaking. But that's been the case for a while, and nothing really changed on that front on Friday. So we'll see there how that's going. And 232 is 2 weeks away, supposedly. So we'll see how that goes. And as to gold stocks, this week was another week of the equities, gold miners saying gold's not going higher. We're very skeptical. And if they're wrong, then they'll have to catch up. And if they're right, then gold's probably heading lower. Now, the it's really interesting when you look at the positioning um, in terms of who is short and who is long gold futures. So it looks like gold is overbought by metrics of historical positioning. And you also have to realize, especially for commodities and especially for precious metals, that supply can be essentially created when some big player wants to go short or wants to get more short. So if supply is created, that tends to temper price moves. And so we'll have to see if gold comes back down a little, which, I mean, it dropped a few bucks at the open on Sunday. So we'll have to see if it comes down a little, how quickly the people who amassed a rather sizable short position, how quickly they cover. And because if that's quickly on the pullback, that's pretty bullish. If it's slow or if it's not, then we'll see. But I really think it's important to have an eye on the who's long and who's short when it comes to gold, because it tells you different things. It tells you who's ready and who wants the price to go where. And, well, certain people have more, let's call it pull, than others. Now, one uranium stock that had a rough day in the middle of last week and then kind of stayed there through the end of Friday, was Bannerman, which is one that in the past while I've been buying. So I'm happy to buy more at a lower price. That's the idea. That's the name of the game, so to speak. Now, it has been holding up in Australia. It moved down in the US, and you know what? It's a nice buying opportunity, so just keep buying, as time goes on, better prices. I have no problem with that. Hopefully, maybe we get a few more months to keep buying. Oh yeah, and the thing I forgot to mention about Bannerman just quickly is kind of relevant. Rio Tinto Rossing sale to CNUC has been approved, so that will happen, looks like. And yeah, so that was bought. And as for next gen, again, still our hedge because of its size and ability to, although I think it's still a long way out, if that gets moved up significantly, that is one of the more significant risks, but it would be obviously good for next gen. So could it slide for another however many more years? Yes, but I think that it must be, well, should be taken much higher with higher uranium prices. Again, if the market figures out what's going on, which I think it will. And finally, this week we're going to be adding to some Liberty Gold. Now, this won't be one of our big key central positions, but having 1 week's worth of 1/3 of 1 week, if you know what I mean, is not really a significant position. It does have some rather developed, not in production, but some different projects. If you look at a sum of the parts for this one with this management, it's not as high risk as some exploration, but it still does have, I think, the upside potential of some good drill results. So yeah, I mean, when I look at this one, I look at the projects that it has. Sure, it can be taken down by further gold price, and yes, they are looking to probably sell what's going on in Turkey, but all in all, good price for this asset base, I think. And it is a speculation, so it is higher risk. And after quite the exciting week, here's an update. And let's see if next week is half as exciting. And until then, until the next video, whether it's this series or another one in between, I wish everyone a great week and would love to hear comments as always. Hope you enjoyed. Till then, have a great day. As always, everyone, please do your own research before making any investment decisions. This channel shall not be liable for any losses incurred from investment decisions made as a result of information obtained on this channel. Good luck with your investments. I'll catch you next time.